Good morning. This is Larry McMillan with a stock market update on Monday, June 24th, just about as the market is opening. Last week ended with a thud as SPX fell back from new all-time highs and closed below 41.90, which I consider to be a sign that the earlier breakout was a negative breakout. And so now we're trying to decide, is SPX just back in a trading range, or is there more to come on the downside? There's support below here, right at about Friday's lows, 41.65, and then at the May lows at 40.60. So as long as SPX is above those levels, nothing too terrible is going to happen. It'll just be in a trading range. If it were to break out above 42.60, again, that would be a new high, but last week's breakout or move above those old highs was so weak, not accompanied by good breadth, and really not even accompanied by put call ratio, by heavy call buying. So, um, if the next breakout is also that weak, I don't think it merits much of a bullish stance, but we'll see. Supposedly, right now, everybody's talking about inflation and interest rates going up, especially after the Fed's comments and then the Fed Governor Bullard's comments on Friday. But if you look at the longer term rates, say TLT, which is the ETF that represents the long term bond, it's actually going up. So traders don't seem to be worried about long term rates. So I wouldn't think this is a complete disaster for the stock market, even if there is some problem with a short term rate. Equity only put call ratios remain on buy signals despite some heavy put buying at the end of last week. The breadth indicators got very sloppy and turned negative last week, and so they are now approaching oversold territory already, especially the stock's only breadth indicator. But as I mentioned before, breadth was weak on the breakout, which is not good, and it resulted in this false breakout now with SPX falling back. Of course, SPX is up this morning as I'm talking, but we'll see how things progress during the week. VIX reluctantly tried to keep from going up on Friday, but eventually did succumb and rose above 20. This is a bit of a problem in that VIX is in a spiking mode. However, that does become a buy signal when VIX stops spiking. So in our newsletters and things, we're setting up potential buy signals there depending on how VIX progresses today and in the next few days. The construct of volatility derivatives, which is how the futures are trading, remains bullish. So typically when the construct is still bullish and the market's pulling back, that tells us that whatever's happening in the market is just a correction and not a bear market. Things could change, but that's the way that looks right now. So things are interesting. We're seeing a lot of indicators flipping back and forth. And I invite you to take a look at our newsletters. We follow all of these things daily, and we'll keep you up to date with active buy and sell signals there. In any case, have a great week trading.